All right, peace and blessings, everybody. Welcome to Sauce Factory Wednesday. Today, we will be going over top-down analysis, market trend reversals, market structure breakdowns, and properly identifying bid levels for retracements on entries and add-in points on today's episode of the Sauce Factory. Let's get it. Oh, participation is always welcome. Make sure you like, subscribe, and comment. Yeah, I had to put that in there because I keep forgetting. Add it. Cool. All right. So what we're going to do from what I've been seeing in the community, right? Reason why we ask you to post the charts because we want to gauge the technical analysis skills of the traders. And I see a lot of bare bone charts. I may see, a EMA here, a fib there, a little something this or too much clutter, right? A lot of times we are really not breaking the chart down properly to get the right information that we need and get rid of the fluff. So we're gonna go over some charts. I got this WPP up on the chart right now, and I got a couple other tickers that I was interested in because I seen the charts and I'm like, okay, these are some great charts that we can break down and really dissect what's going on here, right? So right now we're on a weekly chart, but what I like to do, this is what I normally do when I come up to a good chart, a new chart anyway, I back out to the quarterly chart, which is the 3-month chart. Each candle represents 3 months. If you don't know, now you know. Player. Okay. So as you watch, we're just going to grab a simple trend line here. Boom. We're going to draw that out. Now, we're going to still use I already have a template for 1 month trend, but we already know this came off the 3 month, which is fine still, right? Because it's still in that ballpark. We're going to drop down there. So from there, we are gauging the velocity of the trend. All right. This initial line here is your starting trend. Change that to a 3. Oh. From there, right here on the 11th, 2011, October, right? Price made a rapid turn upwards, creating this trend. This is also a chart pattern. A lot of people don't know this, but this is called a bump and run. When you have an screen, you start having a trend here, then you have a screen push and trend. Eventually what happens, price will get to an extreme point and then eventually start selling off, returning back to this trend or fall into a deeper level, right? Now, what happened is, just by looking at market structure, we're going to go over to this all-time high from the start of 2000. And we're just going to draw a trend line across, right? Boom. And we're going to label that a break of structure. So they swept the high here, and then it just consolidated at this moment here, right? So what that's telling us is price reached the all-time high. This is best it has. Right? Support and resistance. Because this can become support in the future if they ever get back up to these grand large levels. And then from there, we're just going to go down here looking for 3 touches, right? I'm going to wicks. Most people go bodies, but you cannot do both. You can only pick one. So the more times it touch, the stronger the level of support is. So we're going to add another line here because we got to touch here, 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 right? So bing, bing, bing. This is a strong level. How we know so? By simply seeing these 2 candlesticks right here. You see how you had a strong bearish engulfing taken out by bullish engulfing, right? These 2 elephant-sized candles. You draw a box right there just to cover up these 2 candles, right? Just incorporate those 2. And then boom. You see when price came down here again, what happened? They reacted to this level. So this also gives you another layer of market-based analysis. You know for sure down here is a buy-in level for market makers. They like to buy in at this extreme discount because they know the company is not valued at this, but they do feel comfortable buying here. Now, what's currently happened by reading the tape, we have a shift in trend. From here, we had an all-time high coming up, boom, Price fell down, bounced back up, came back into the zone, and bought right out of there. Just kind of got out of there, right? And got up. Made a new all-time high, and then from there, now it's starting to fall. Back to this level. That's a huge retracement. That's pretty much almost 100% retracement. So by using a simple fib from this pivot point, because this was the drive move up, right? So we're gonna go from this point here to the all-time high. And look, it made an 88% retracement, almost 100% retracement back down. And it been stuck at the 38% was the last high it made in the last 2 years. From there, it just been trading in this zone here, right? But what can we gather from that? It found support at the 88% level, but it found resistance at the 38. Fibonacci levels are also support and resistance stated as having the mathematical formulations or formulas that people use, right? So when you're looking at it as it's passing through, you don't want a lot of resistance on the way back up. But what they did was, this was your last swing high here, right? Boom. All they do was sweeps market liquidity and told you, hey, this is what we wanted. This is all we wanted. It made it seem like they was going to create new highs because they took out the last high there. And then they said, all right, cool. We lied. We're going down, right? Let me go get my fancy Nancy broom because that's what we do. Whoop. Yeah. You have your sweep. Now it's telling you, hey, market is shifting back down, right? But what we currently looking at is this. Hey, we got a potential double bottom situation here going on, right? They found support back into this order block. It's not a perfect situation, but you see how they kind of came back here, made equal lows from this candle to this candle, making a V formation. Looking like they want to go up, but we are not sure until they actually break out, right? So they must break this high before we can call that a pattern. But potentially, if they break it, then we'll like, okay, that's what we need to do next. Now, we got our trend. We have a scenario, a thesis statement on why it should do this, why it shouldn't. This is a screen discount. So we know for sure if they have any fundamental value, they can go up from here. So we just going to keep busting the chart down. Now we got all this off the 3 month. So let's go down to a 1 month real quick. We just going to take a quick peek. We ain't going to stay there for long. And then we're going to shift over, right? So now going down to the 1 month, we get a little more market structure here. We get a little more price action because we have more candles on the chart. Each candle equal 1 month. The last one, each candle equal 3 months, right? And now you can see like, okay, every time it bounced, boom, it was riding this downtrend. One heck of a go, right? The moment you already knew you had one target, but this the home run was here. Now, what I use to see, hey, is it going to keep going? A simple 34 SMA, right? So y'all know. So SMA 34, nothing fancy. I just made it look different, but that's it. The moment it broke out of consolidation, anytime you get price playing in consolidation for that long of a period of time. So let's look at it, right? It was in its zone for good, I think, 1,340 days. That's how long it was in that zone. So that's a lot of consolidation. Somebody gonna lose. Understanding that, right? So also understanding that, hey, once it closed below that average and then you seen it breaking down, staying below this average, every pullback here is a new buy-in opportunity. Buy in, right? Keep it simple. So when it pulls back, you'll say, okay, great, that's another buy-in opportunity. But how you gauge those opportunities by looking for discounts in price. You seen when it broke down here, it popped up, right? So would it be a good level? We're gonna use another fib again. For sake of not cluttering the chart, we already seen what this is gonna do. So let's get rid of this fib. All right, and then we're gonna focus in on these said points. So this is the last pivot. I'm gonna go here, boom, and I'm gonna go here, and I'm gonna change the tempo up, right? All right, good. So as you see, in the pullback, still closed price rejected at 34. Got closed but no cigar. 50% retracement. Went 50% off on the way of the pullback. Once you've seen it could not cut the mustard, guess what? That means you're safe to stay in your trade. Okay, great. Now this is your new pivot point, by the way, because it's a failure swing. It didn't go nowhere. So now when I come down here, I'm gonna draw me another fib from point A to point B. Boop, boop, boop. Boom. And then you're going to see price came back where? 38%, almost to a 50, but it rejected right at the 38%. Not a strong rejection, but still a decent rejection. So price going to push down again, got to you negative 27, right? And then what happened? This when things start getting spicy, right? Things start getting spicy after wave 2. Because you had one push down here. That's 1. Boom. Pull back here. That's 2. And this is the change of the whole entire system, right? Typically, you would have been looking for another pullback and drop. But when you get those partial discounts, a 50% discount is great. A 38, if you're already in a position and you're driving it home to this point, could you put on another position? As long as it discount, cool, right? But that's up to you and your greed. I can't tell you what you should do with your money and how you should be able to do it, but this was a fine buy-in level, right? But let's understand you are starting to trade into a target zone. Understanding those target zones can help you stay in your position or get out at a decent position. If I know something's coming to an area where they look to the left, they reverse multiple times at right, they had some form of reaction to, I'm gonna be looking to take profit when we get to this spot here. Any form of rejection, I'm getting out of Dodge. I'll look to definitely be getting out. The moment we would have took that low out, you could have actually been trimming positions the moment they did this low. So those are things you look for. Now, as it breaks down, you say, okay, great. Price pulling back. You look for your pullback, but when it started getting funny, see, this when things got funny. It just didn't pull back. It did something crazy. It took the whole top off. It took the top off that thing, and then it dropped back down. Well, guess what? When it dropped back down, look what happened. The 23 was support, right? So it kind of found a 23.38. Let's change it this way so make sure everybody can see this for later on in the video. So when you found a 38, it held support. Even though we know originally this was the original trend, this the pullback for this trend, but if you flip it around, change directions, you can get different outlooks on life, right? So that's about taking a different perspective. But you see, the 38 is holding support. That's what I mean. This can be resistance or support. And now we have a double bottom situation where price consolidating at a low, trying to make a decision, see if they want to go off or they want to fall to the dirt. Below this level, it's over. Promise you, right? But this is when we start looking at the oscillators. The oscillators in the bearish territory, RSI and the MACDs below. Let's drop down to a weekly chart now, right? We're gonna keep doing a quick little market analysis. The RSI trying to get up there, the MACD right on the 0 level, indecisive. We really don't have no defined levels yet, but we see price been consolidating here for a while, right? If we can get some form of a market push up, probably taking a high and then a pullback of a discount, then yes, that'll probably be safe to say, hey, we are changing directions, we're getting some momentum. Let's go down to a daily chart, right? So I'm just going to keep reading the chart and see what it's doing. Like right now, the RSI say, hey, we're going to want to go up. The MACD saying, hey, it's want to go up. I'm looking at my price action saying, hey, we kind of gapped up today, but that is a holiday. You know, market closed early, but still they had enough momentum to gap up. So what can potentially be happening here? Is it a pullback or is it the reversal we looking for to go higher? Well, if anything, you can just run a fib from the last high or the rejection from the 61%. Spot it right there, and then you look for your resistance zones. If it doesn't resist, then hey, we good to go. If it does, then take it easy. Don't put the foot on the gas. Just watch price action, set some alerts, and walk away. But let's slide over to another chart. But that is your WPP, right? Which one was it? Oh, it was Pfizer. Yes, Pfizer was another great one. Right, let's get this 34 off of it. Bust that down. Let me go out to the weekly chart real quick, and I'm gonna show you something. Every market do the same thing. As you see, Pfizer had a nice little uptrend going on, right? This was your trend. Technically kind of broke down. It kept changing directions. So 3 touches makes it a trend. This FY, boom, boom, boom. They broke the trend. So you can say, hey, in most cases, you can start changing your degree of trend like this. But you say, well, this is more an extreme trend here. You can still catch it, right? So this is technically that trend, but the trend had changed directions multiple times. So you can just draw these out. Now I know a lot of people, they go crazy with these things. As you see, price like to revert back to mean. Right? Before we add that one, I want to bring this one back down real quick. Let's see if we can catch that candle low. Okay, great. Remember, we want to slide across the bottoms here, right? Typically, how you want it to go, you want to just slide like stairs on the bottom of each candlestick, like that. Perfect. That's your trend. Now, you see in Pfizer, you had extreme moments, right? Like here, they made a new high. You know why? Currently, they suffering through lawsuits, so we know what time that is, right? On the fundamental side, when you get to these higher time frames, these are things you're looking for: lawsuits, acquisitions, the CEO, what the CEO is doing, right? That's when you start getting to your fundamentals, when you start getting up to your higher time frame charts, so you can get a clear direction of what's going on. We don't want to be all technical based analysis, because we can get blinded about what we see, and if some good deal come out or a bad deal come out, it can really put the screws to our plans, right? So I want to be aware of that. But checking out the trend by itself, they say you're not sure what's going on, you're just looking for a 30-day, 40-day, or 3-month swing. You can clearly see, like, all right, cool, they swept the highs, made a new one. But right here, price came here, and then the market starts shifting, right? So one of our famous saying around here, we got our market structure shift. It's S. And then another thing, people like to call a point like this, when price fell to get back up to a high, because it did it twice. This is a failure swing. All right, so FS, failure swing. So when price failed to get back up to this high, that's your failure swing, letting you know, hey, the market is not going to return to highs and something else is going on, right? Reason being is this. Now you're going to be like, okay, cool, price didn't come up to this high, let me mark out this low. This is going to signify when things really get ugly, when they take that low out. So this is my external level, because it's supposed to be my higher low, but that turned into a lower low, lower high. Now you got it didn't return, so technically that would have been a higher low, right? But once again, you had another failure swing. So that's the finding, hey, we are not going up, we actually are shifting downwards. But you could have told from here that you're shifting downwards. So you got another internal breaker structure, because it's internal price. This is a extreme area, and it's anything in here is your external, here to here, right? So let me put some markers up. Yeah. External levels, they out there. Let's get that out, right? external market zone. Cool. If you want to, you can add a box there. Turn this like this. Now, looking at your external levels, you seen what happened with price. Eventually, it kept shifting down and broke out, right? Because this breaking structure happened back here. Once you've seen a low get breaking out, if you're still bullish on this company, that's when you gotta really think about what are you actually bullish on. Are you wrong? Do I need to change sides and start reevaluating my position here, right? You can add simple moving averages. As you see, price starting to close below your mid-term moving average, right? You say, things are not looking too well. Well, let me add some other movements, some EMAs, right? I got some 513 here with a 200. Well, when it broke the low here, price bounced off to 200. Well, let's see, right? But this is a great time when it bounced here, failed to take any highs, right? Because it really only returned back up to this level, still back inside the zone here, right? This is your last swing. It swept that at best. It did not get this one, right? So you had another one here. It did not take it out. It barely squeaked past it. Not if that. Nope, it didn't get it. So once it got back to these highs and you seen that force pin hammer coming back down, right? That's the hammer candle right here. No bottom. This flat bottom, no wick. Boom. Come on now. Slap them. Textbook, right, Melina? This one?
No, I'm seeing, are you channeling your Oliver Velez? Boom.
Yeah. But remember that's the candle we was talking about a couple weeks ago? That shooting star one?
Yeah.
There you go. It's a perfect one. No wick, all body. Pin bar. So, straight to the dirt. That's another one you use. You use your signals, right? Candlestick patterns to also signal that, hey, this ride is not forever. They actually are bearish on this. One of these at the top of an uptrend. You know what time it is. Your 5 EMA cross back over, sending price back to the desert below the 200. Now that we below the 200, we're in the bear side of the market. It's no need to be naive. We know this is going to the dirt. Let's enjoy the ride. From here, we're going to get rid of these moving averages because we don't need them. Not right now. Right? If anything, you can use one guiding moving average because the more you have, the more confusion you're going to have because you're going to be like, well, it's close to this one, it's close to this one. You can confuse yourself. I prefer for you to look at price action, follow what the chart is doing. You see they took out another low, right? Because this is expansion of range. Look at this box out here. Once you had them taking out this low, understanding, hey, this is a extreme bear market. Every pullback on every green day is an impossible opportunity for you to take these boys to the dirt. So I'll be looking for pivot points. I'm like, okay, great. What we got here? We didn't get a 20. We barely got a 23, but Starbucks is effing up. But inside of that range, you seen like, hey, that was a decent pullback. How many points from this low? Cool. Starbucks went up $3 that week and then shifted, right? And here's another pattern. This is gonna confirm. If you don't want to catch, you didn't get a good pullback, you can at least do your chart patterns. What pattern is this, somebody?
Evening Star?
Thank you. Perfect. Smoked them. Like somebody gonna do tomorrow on the pit. Shout out to Rob. He cooking for everybody. Y'all go to his house, get free food. Yeah. So from there, you can go on here, back down here, because remember that's our new pivot high, right? But this time price pulled back. It did a 618. They wicked at it there. Drove people into the red because you got in on this drop here, right? They test your patience. They definitely test your patience. This weekly chart, by the way, too. So they brought that thing back up there, boy. I know you're sweating bullets because you had a nice little whoop, and then they brought it like they did that, like that, like that. I know you got nervous. I know some people got nervous on that, but you had a strong belief in your trade. They did not take out the high because you would have got in on this said part of the trend. You would have got in here. Your stop loss should have been here at the 100% mark of this high. So 42.22 should have been your stop loss for Pfizer. Point blank period. You had no reason, if unless you take out the high, you can sit there and you can take this trade. You should have been at discount anyway, and you should have been stop loss here. Now, if you say, hey, I don't want to give up too much green, I want to move my stop loss and profit, that's one thing. But in most cases, no, you don't want to do that, right? You want to simply enjoy the ride, let the trade play out, get your negative 27 or wherever you want to go with it, whatever your target at, you get that. Let the trade do what it needs to do. You don't have to be having paper hands. Or if you see it returning back to the high, you can say, okay, cool, I took profits here, was back here, let me see what's going to happen. Do it close below this level? If so, I will re-enter the trade or add to my position long as it's staying in my favor. Because if you're going to come back here and it's starting to show weakness that it's still breaking down, well, guess what? I don't mind adding to my position here, right? That's just another buying opportunity because technically it's still below my 34, way below it. If I add my other EMAs, well, guess what? We definitely below the 200 and we got crossovers, right? We got a 34 200 crossover, 513 to 200 crossover. My 513 didn't even cross back over. So I know I'm smooth here, right? There's nothing but another pullback. The pullback just wasn't done. How we can tell by looking at our other indicators, right? Our oscillator's telling us the RSI is still below 50, bearish territory. The MACD way below the zero level, bearish territory. So when they got here, this is the reason why you need to triage, right? You put your vertical line, you say, they was on the way up. So with that type of momentum, when they just crossed, you should have stayed out the way, right? Let them do what they're gonna do, and then once they get there, boom, you take advantage. You feel me? And that's how you get that. That's the best thing to do. So you don't want to overextend yourself at the wrong moment and get that, get caught up in that. Y'all have any questions so far? Nope. All right. Smooth. But these are trend-based skills, and we just breaking it down. Just watching it, just break it down, right? Nothing too crazy. We ain't fancy. We ain't doing nothing fancy. We just, this simple, follow the trend, because the trend is your friend. Okay? Not all trends, but this is a trend that is your friend. By incorporating your chart pattern skills, your moving averages, fibs, and market price action reading skills, you can follow the trend and have a grand time doing so with no problems whatsoever, right? That's what you want to do.
The question, do you think right there, now that the candles are above your blue dotted line, I don't know what EMA that is, but are we starting to break the trend potentially?
All right. This is the 34.
So I'm seeing some consolidation there. So could that, if you were on a shorter time frame, that's May and June. Are those maybe two dojis? The month of May and June, two dojis?
The month of May.
You did the monthly?
All right, let's go up. Let's go to the monthly.
Oh, look at that double inside bar. Oh, we're about to break out.
Yeah. Hey, okay. But see, the whole thing about Pfizer is I like to see a pullback, right? They are beat down, but look like they're gonna go return back to the dirt. So they are consolidating here. What I want to do is be patient and wait for a breakout, right? Because we see what they're doing, right? Simple.
Yeah, it's forming a base.
Yeah. So, they're gonna go off, Or they're gonna go to the dirt with the pending lawsuits. People have no reason to invest in them, right? And we'll see this one fib we don't use that often around here, not do we, right? But we're gonna use it today. This is called a fib base extension, right? See, we're gonna extend this escalator. Boop. On down, right? Now, this is a monthly chart, so you're going to have some levels. But if it does, because it's a little pullback, right? We're just going to use from here to here. We may drop down and redo it again. But you're looking at $12.30 if it gets to the 61% extension level. All right, let's drop down to a weekly chart so we can get a little more price action.
Show me that tool one more time. What did you do?
Oh, I'm going to do it again. I'm going to do it on a lower time frame because I want to catch another pivot point. I don't want to be so extreme, right? So let's take it from here to here, right? So what we're going to do, well, y'all get the gist of all of that. So let's clean the chart up, right? Boom, chart clean. So we want to see the extension of where price can go. We don't really have a clear idea. Well, we got price to the left, right, Melina? Where price used to be, way down there. But they say we don't have price there, right? This is called the fib base extension tool. So I want to catch this pivot point here, right? And then I'm going to come down to this low, and then I'm going to pull it back to this high here, right? So now this gave me my extension levels of where price can go. As you currently see, we hit the 61%. They consolidated for a couple weeks, dropped down to the 100% extension level, consolidating. Now they can keep going down to these levels here. All mathematical. It's a 3-point. You go here, here, here. You can make an L with it, or we can get spicier. We can get real spicy. Now let me show you now. We can do all kind of things with this. Now, let's get that out the way, right? Let's get another one on that thing. So we can say, hey, I just want this little level here, right? I'm just gonna go here, then boom, and I'm pull it back up to the same candle and drop it right there. I don't have to go to that level. Let's say we ain't got this price yet, right? So we only got this candle. So I'm gonna drop it back on the same candle, right? Now I still get my levels here. Or let's say, well, let's go down. We're gonna go down to a lower time frame. I can show you this. Well, go to a 1 hour chart real quick. You can catch that trend. Some people even do it on one single candle. So you can go, let's say the thing was going up, you can pull it right back down, just like that. Boom. Now you can see, like, hey, what price gonna go? Right. But this
so wait
was
a minute. If I pick one single candle, I can go up and then down, and then it'll just fib where the next levels are gonna go.
If you have no idea, this is for when you looking for price to follow a trend and you have no clear picture of where the trend gonna go. These are your extension levels. So this is projecting future price levels.
I know that, but I just wanted to see how you drew it.
Yeah. So yes, it's 3 touches, right? So you follow the trend. Let me grab it again. Right. So let's say we start here because this is where the trend started at. Boom, we had our initial drop here, right? And then we're gonna pull it back there. So 3 levels, 1, 2, 3.
That one I got. How about when you do 1 bar?
1 bar? No, that'll just me showing off. But yeah, I got you.
Because you just did it right there. Yeah.
Yeah. So this is, a little tricky trick. You want to know little small, crazy little time frames, and you ain't got no. You want the boomies? You can do this too. So we can say, all right, we want to look at this bar here. I'm going to go to the high, back to low, back to the high again. I'm just going to loop it back. Okay. There we go.
Because what I did, I just did like a regular fib and just added fib extensions, but I didn't do this piece. So maybe this is what I probably need to do. Okay.
So this is for that, right? You can add fib extensions to your current fib, but it doesn't kind of make it look cluttered, right? I like to use it for, like, I use the regular fib for like retracement zones and say, hey, this is where it's gonna retrace, and I have my extension levels for quick targets that I want off of it, because I'm like, okay, if it goes here, I'm just my profit taking targets, right? And then I got some where, hey, if it happens, it can go there if it goes the other way, right? Now let me give you the numbers for this one. So y'all can take a screenshot of this, and later on y'all can pause the video and get these numbers that y'all like. These are all the field numbers I use for my extensions.
Okay. So you like 27%, huh?
Yeah. That's pretty accurate.
Yep.
You come on now. You know it. You seen that wonderful work that 27 do. You seen what it do, maybe. Yeah. So these my levels. Y'all can take that. Oh, let me give you my regular fib, my other fib levels too. Oh, let me just plot that out. Back. See, look. This from there to there, right? Let's get this other fib off. The 27 hits. See that? There you go. Pop up. See, you want to go like that. They're gonna go down there eventually, right? So let me give y'all these other levels. There you go. So these are all levels I use for my Fibonacci sequence, and then I switch it over to percent. So this is how I got mine set up. Took the background off, got it over to percent. It's all smooth. But yeah, this is what I'm coming with. This is how I'm coming.
Okay, I see you coming.
Okay. So yes, that's what I have. These are my levels. So do we have any questions? We'll wrap this up.
So the now that you saw NQ that went to the moon, where's it going now with your fib extension?
All right, well, let's go ahead and scroll over to the future market. Let me go. Watch list. We'll do this one. And then I gotta go carry the boat. I hope y'all got your workout in today, or y'all on the way to the gym after this.
Oh, I already got my workout this morning. I'm good.
Proud of you.
Gucci.
It can only be one job frame. Remember that. It can only be one. All right. Okay, this I pull back there because they trying to push it up. So yeah, these the levels that my fib extension is projecting. 25, 35, 25, 621, 25, 683, 75, and so on. That's if it follow that set trend.
Okay, thank you.
Oh, my pleasure. Anything you need. See, over here at Tika, we believe in mind, body, and soul. How you say it, Tony? It's the other way around, right? It's soul, mind, body. Something like that. He said. What is it, my brother? I know he got the correct saying. He'll correct me eventually. He'll put it in the chat. Yeah, so we need well-round lifestyle, okay? Not only we need to do the due diligence on the charts, we got to do the due diligence in our life. What you plant is what you grow. The earth will give you whatever you plant. You can plant a wonderful healing herb, or you can plant poisonous nightshade. It will give you an abundance of both of them. So you plant bad things, you get bad things in abundance. You plant good things, you get good things in abundance. So the time y'all take out every Wednesday to show up to class and get some sauce, this is you planting good seeds. This is you brushing up on your skill set. This is you learning more and growing more for you to plant bountiful bounties, right? For you to plant something so wonderful where you achieve and master other things in life. So keep growing your skill set. Take that extra lap. Read that extra page. Study that extra video. Whatever you got to do, right? Keep planting good things, because the more good you put in, the more good you get out. I promise you. So on that note, we're going to stop here. And let me get that little